Bitcoin can't be valued. No earnings, no cash flow. Every finance textbook says so, and they're right. With the tools we use for stocks, a real price target on Bitcoin is impossible. But what if you change the method entirely, close the textbook, and reach for gold? Gold as a ruler for Bitcoin. How would that even work? Today, we're breaking down the hottest and most frightened asset on the market right now. Bitcoin. The question is simple. How do you actually value Bitcoin, and how high can it go from here? How to value Bitcoin. Bitcoin price target for 2026. Right now, those are two of the most searched questions on the internet. But the timing is strange because the mood could hardly be darker. Last October, Bitcoin hit an all-time high near $126,000. Today, around $66,000. It's been cut almost in half. Even gold, the classic safe haven, is down about 26% from its peak. Everywhere you look, people are saying crypto is finished. And right here, at the very bottom of that fear, I want to do the opposite. Put a price target on it. A pretty bold one. So let's break down exactly what ruler you use to measure Bitcoin, and whether the number it spits out actually holds up. First, let's get this straight. Why is Bitcoin so hard to value in the first place? With stocks, the method is settled. You estimate all the profit a company will earn in the future, discount it back to today's value, and you get a fair price. That's called discounted cash flow, DCF. It's the bedrock of stock valuation. But Bitcoin, no profit, no dividends, no revenue, no cash flow at all. There's simply nothing to put into the funnel. So DCF breaks on the very first line. So this analysis has to start by being honest. Precisely calculating a price target for a coin really is impossible. But we don't just give up here. We can't pin down an exact value, but we can still set a marker for how far it's reasonable to go. So how do we set that marker? From here on, we need a completely different ruler, not DCF. So which ruler do we use? One starting point decides everything. What's the most important thing Bitcoin has done so far? In my view, it got the world to accept a coin as a real asset. It used to be treated as gambling or a scam. Now institutions buy it, and there are ETFs. And at the center of that acceptance sits one single story: digital gold. This part matters. Out of all of Bitcoin's faces, a payment method, a new currency, a tech platform, the one the market actually pays up for is its identity as a store of value: digital gold. The role gold has played for thousands of years, done digitally. So the answer falls out naturally. If you want to value digital gold, you measure it against real gold. That's exactly why we set a gold bar down next to the calculator. The method is surprisingly simple. Just 2 lines. Line 1. Bitcoin's total market cap equals gold's total market cap times the Bitcoin to gold ratio. Market cap is just price times quantity, the total size of an asset. So this line is really asking one thing: what percentage of gold's giant pie will Bitcoin grow to be? Line 2. You take that total Bitcoin market cap, divide it by the number of coins mined so far, and out comes the price of a single coin. This research uses the figure from a site called BitBo, about 20,050,000 coins mined to date. And since Bitcoin is capped at 21 million coins ever, that number barely changes going forward. Here's the key. This formula takes just 2 inputs: the market cap of gold and the ratio. Everything else is arithmetic, but a quick warning up front. Even this simple formula hides an enormous number of assumptions, especially in that one ratio. We'll get to that shortly. First, the easy input. The first input is gold's total market cap, and this one isn't a judgment call. It's just data. According to the site Company's Market Cap, gold's total market cap right now is about $28.8 trillion. Call it 29 trillion. That's a hard number to even picture. Gold is the single most valuable asset on Earth. And here's the interesting part. Gold has gotten cheaper too. At its all-time high earlier this year, gold's market cap was around $39 trillion. Now it sits about 26% below that. It's not just Bitcoin that got cut down. Gold has pulled back as well. So here we make a choice. Use the 39 trillion peak or the 29 trillion of today. We'll take the conservative route and use today's 29 trillion. That's our first ingredient, the size of the pie. Now for the second input, the important one. And this is the one place in the entire calculation where judgment comes in. Honestly, this is where the most arbitrary assumptions live, the Bitcoin to gold ratio, how big Bitcoin's market cap is as a percentage of gold's. Looking at the historical data from a site called Milk Road, the story goes like this. In 2013, this ratio peaked at just 0.2%. By 2017, it climbed to 4%, a 20-fold jump. Then in 2021, 10%, and that time a 2.5 times increase. And here's the thing to notice. The more mature the asset gets, the slower the ratio climbs. From 20 times down to 2.5, which makes sense. The bigger something is, the harder it is to multiply. But here's where the bull case comes in. That 2021 peak of 10%, that was before Bitcoin ETFs were even approved. After that, during the mini bull run following Trump's inauguration in 2024, it reached 11%. When Bitcoin hit $126,000 last year, the ratio was actually only around 8%, not because Bitcoin was weak, but because gold was soaring at the same time, which pushed the ratio down. And today, after the crash, the current ratio is about 4.17%. So how should we set this ratio? The logic goes like this. As Bitcoin keeps moving into the mainstream, gets accepted as a store of value, and the digital gold story grows stronger, the share it takes from gold should climb higher. So we'll put 10% as the most conservative bear case, and applying that same 2.5 times jump from 2017 to 2021, we'll set 25% as the most optimistic bull case. Then we split the range from 10 to 25% into 4 steps. This is where it gets good. Let's start with 10% times 29 trillion. Now these targets are such big numbers they won't mean much on their own. So I'll line them up next to the market caps of the largest companies on Earth. That's what makes it real. First, a ratio of 10%. Bitcoin's total market cap becomes $2.9 trillion. Divide by about 20 million coins, and one coin is worth roughly $145,000. At that price, all of Bitcoin is about the size of Microsoft, the third most valuable company in the world. That's 2.2 times higher than today's 66,000. Second, 15%. A market cap of 4.35 trillion, about $217,000 per coin. That puts Bitcoin right up against Apple, the world's number 2. 3.3 times today's price. Third, 20%. A market cap of 5.8 trillion, about $289,000 per coin. And here, something happens. This size passes NVIDIA, the world's number 1 at around $5 trillion, which means one single asset, Bitcoin, becomes larger than the most valuable company on the planet, 4.4 times today's price. Fourth, 25%, the most optimistic bull case. A market cap of 7.25 trillion, about $362,000 per coin. That's roughly 1.4 times NVIDIA. At that point, the only thing on Earth bigger than Bitcoin is gold itself. 5.5 times higher than where we stand now. So the range this framework produces for Bitcoin is $145,000 to $362,000. Picture it as a climb. Bitcoin stepping up the ladder of the world's biggest companies, one rung at a time, until it's standing just below gold. Now let's hold these numbers up against this exact moment. Bitcoin today is around $66,000. So what this framework is really saying is, from here, at least 2.2 times, and at most 5.5 times. And what stands out to me is the timing. These numbers didn't come from the top of some euphoric rally. They came near the bottom, after Bitcoin was cut in half, with fear everywhere. While most people were saying crypto is dead, we quietly sat down and did the math on pies and percentages. That's the core feeling behind the bull case. The cheapest moment is the hardest one to see. And there's one interesting outside check. Tom Lee of Fundstrat, one of Wall Street's best-known Bitcoin bulls, has a 2026 target of $250,000. Our range, $145,000 to $362,000, lands his number right in the middle. Two people using completely different methods pointing at the same neighborhood. That's a signal this map isn't totally crazy. Now, there's something we absolutely have to address. This is the part I most want you to take away today. This is not a prediction. As you just saw, even the simple formula is packed with assumptions. Whether you read the ratio as 10% or 25%, the answer swings by 2.5 times. If gold climbs again, the target rises with it. So these numbers aren't a forecast to believe in. They're a rough reference point, a sense of how far this could move. And out of that attitude comes the real thing to keep from today, a way of thinking. In front of an asset you can't value, the question to ask isn't, how high will this go? It's, what percentage of something else will this become? Bitcoin as what percent of gold? The name for this is relative valuation, pricing by share of an anchor. You define the pie, then you assume how many slices it takes. And this ruler isn't just for Bitcoin. Take Ethereum. You set Bitcoin as the anchor and ask what percent of Bitcoin is ETH to get a target. Startup valuations work the same way. What percent of the total market will this company capture? Anywhere DCF breaks down, this what percent way of thinking is almost always a backup ruler. One last thing I have to say. This is not a recommendation to buy or sell any asset. The numbers today aren't answers. They're markers built on assumptions. Change the assumptions and the map changes. The final call is always yours. So to sum up, valuing Bitcoin isn't a game of guessing the future. It's about drawing the lane the future might move through. And today, that lane ran from $145,000 to $362,000.